So you've now learned the importance of reconciling in the two-step process and that we shouldn't change retained earnings, which means we have to be really careful when we're doing cleanup so we don't change the past. Now, some people might think, well, I can just fix things as I go because the CPA has my QBO file. Like, as long as they haven't actually had me sign the return, it would be fine to change stuff, right? No. The answer is no. So there's software that you guys probably even haven't heard of, like ProConnect. And these are software platforms to create tax returns. So the CPA is not creating your tax return in QuickBooks Online. They're pulling all of your data into their tax software. So it really is a one-time grab. So if you send stuff to the CPA and on the 1st of February, their staff pulls your data out of QuickBooks Online and pulls it into their accounting software for tax prep, and then you go and change stuff for the year that's being closed, you go in and make edits. They don't have those edits because they've already pulled the data into their software. Make sense? So as soon as you send the CPA documentation to have taxes done, assume that it's lockdown mode. No changes after that point in time, because you don't want to make changes that they're not going to see. And usually if there are more involved corrections that are needed, like this, I know CPAs reach out to me as the part-time controller or the person that did year-end close and ask me, sometimes they ask me for help to fix the thing. In fact, often they're asking me to fix the thing so that they don't have to deal with it. So I go in and fix the thing, and then they know a change has happened, right? And so it all has to be timed correctly. Now, one of the documents you're going to start making sure you get from your CPA every year is the adjusting journal entries. And like I said, they tell you what's being done wrong. It's not that your bookkeeper needs to be thrown under the bus wrong. It's there's some sort of system that is in place that is causing erroneous totals, and we need to figure out what it is, right? So it's all about sleuthing. You want your bookkeeper to be somebody that acts like a data detective. We're going in and we're sleuthing out the mysteries. We don't have to take it personal. We're not the numbers, but hopefully we're there to help you instead of argue and get defensive. And that's one of the things that I really try to instill. Like I said, I really try to instill in bookkeepers this level of confidence so they can feel comfortable with what they're doing. Which leads us to two topics. Number one, S-Corp Medical, and number two, AI. So S-Corp Medical is a recurring problem. We often have CPAs reaching out to us saying, hey, S-Corp Medical wasn't included in the paychecks correctly. I need you to amend the fourth quarter return and change the owner's W-2 and blah. None of this people want to be doing in January and February, right? You don't want to have to be amending things, so we make sure it's correct on the front end. So part of that means in October and November, we do an audit because the amount of S-Corp Medical that's on the owner's paycheck must exactly match the cash basis what was paid during the fiscal year. So if your insurance renews in August and the rates change, you have to make sure that you do the math with the old rates and the new rates and what's the total and does it match what's on the paycheck. So what is S-Corp Medical anyway? So if we ask, what is S-Corp Medical? What is S-Corp Medical? What do we get? What is S-Corp Medical? It is not the Standing Committee on Human Rights and Peace. I can tell you that. This is why I really want all of you bookkeepers out there that are listening, I need you to not rely on ChatGPT or in this case Gemini. I need you to actually go to government websites if you want to do research on topics, okay? So if you're doing research, I don't want you using AI filter. I want you doing it yourself. If we scroll down, S-Corp compensation and medical insurance issues. Bam, irs.gov, saving the day. So Anyone that's a 2% or more shareholder for an S corporation business. Now, you could be an LLC for legal status and an S corporation for tax status. So you have to know what kind of entity you are, okay? If you are S-Corp entity, then anyone that's a 2% or more shareholder is subject to different rules. You cannot set the owner up with employee-employer portions of medical premiums. That is not accurate. And unfortunately, that's what I see people do. Even business owners who are trying to do their own bookkeeping. They get medical insurance, which is an amazing feat. Like if you can actually get a medical policy to cover your employees, that's amazing. You know, if you're a new business owner, getting to that level of income that you can afford to offer those kind of benefits, huge win. But when you go to set it up in your payroll system, the business owner has to have this special S-Corp medical payroll item. And the way it works is the entire premium, so whatever premium was under the owner's name, all of it needs to be run through payroll. It's taxed for federal withholding taxes and then deducted back out. So at the end of the day, what S-Corp Medical does is it increases the federal withholding taxes to cover the taxes that will be due on the medical premiums, all right? And then personal tax returns, deductions, words, don't worry about all that. You don't end up having to really pay taxes on it. It's kind of just a shuffle. We can deduct medical premiums on our personal tax returns. So that's what the CPA would end up doing for the owner. So it just gets deducted in a different way. But it has to be on the W-2. If the owner has medical insurance paid by the company, whether it's just the owner has a policy and the company pays for it, like what I have, or if you have a policy where many employees are covered, whichever kind of scenario it is, even if you're paying part of the Medicaid premiums for the owner, dental, vision, medical, short-term and long-term disability, all of that has to be treated as S-Corp medical, included in payroll on the owner's W-2, and it must be an exact match. And when it is not an exact match, it is such a disaster. Sometimes the CPAs are having to push money into the new year and put like a tax credit in the new year, and then you have to keep that in mind when you do the math to figure out the total that should be included on the W-2. Like, it's a thing, right? And it's a thing that we have to take seriously, because if it's not done right, we end up having to amend returns and fix it. So this IRS article includes things like what S-Corp Medical is all about, right? And you can read through all the information. Here's some right here. Greater than 2% S-Corp shareholder has to be deducted, reported as wages, and it's a special type of wages. Like I said, it's brought in, taxed, and then deducted back out. So S-Corp Medical is something that I want all of you to look into and make sure you're doing correctly. I'm going to do a little Q&A on questions that I've had from clients over the years since I'm not teaching this live. So it's only the owner's medical, right? They have a family policy, but the child and the wife all work at the company. So the wife and the child, they can just have employee-employer portions, right? And it's just the owner's portion that's no. It's whatever the owner's policy is. And if the owner has a family policy, meaning family, spouse, and child are covered on the policy, that entire policy has to go on the owner's paycheck. So don't if it's one policy with one premium amount, don't divide it up between the family members, okay? So all of it has to be under the owner. What if both owners are owners, right? Well, just put it on one of the owners' W-2s. Keep it simple, right? let's see, other questions I've had. So what if the owner pays their insurance and then they have me reimburse them for the amount? Consider it that the company's paying for it. It's just in a roundabout way. Consider it company paid and put it on the W-2. What if we decide to pay the January premium early so that we can have it as a tax deduction to drive down our profit? Well, lickety split, hurry up. You just found out you have to have another month's of premiums added to the W-2. Surprise! So when it comes to surprises, don't do it. When it comes to trying to pay things early, pay your rent early. Don't pay your medical insurance early, unless you plan ahead, right? No last minute changes when it comes to paying the medical bills. Okay, our CPA said just put it all on the final paycheck of the year. That we don't need to worry about doing every payroll. Just put all of it at the end of the year. That way we do one calculation and just plump, done. Well, let's think this through, okay? So going into 2026, hopefully y'all are working on getting your insurance renewals so you understand what's going on with the world. My insurance premiums, if I stay with the same policy that I had for 2025, increased by almost 50%. Okay, so let's do a mind experiment. If the employer was the only one covered, they didn't have a family plan, let's assume it's like $1,000 a month. Okay, so $12,000. So you want to make a paycheck and add $12,000 to it? Paychecks, by their nature, look at a point in time based on your payroll schedule. So let's say you pay monthly. So it's going to take that $12,000 and say, oh, this is what you paid someone for 1 month? And it's going to do the withholding calculations as if that's what the employee is going to get paid. So in my experience, putting it all on one paycheck at the end of the year causes a huge tax burden, bigger than what it would be if you included it in each paycheck. So include it in each paycheck, little bit of tax burden. Put it all at the end of the year, giant tax burden. Now, of course, you could, if you have the ability in your software, you could override the federal withholding and reduce it because it's going to be astronomical. But I don't like the idea of waiting till the end of the year to add it. One, the payroll processor might forget to do it, and then you're really stuck if they've already done the quarterlies and the W-2s by the time you notice. Two, most payroll softwares are going to create an astronomical federal withholding if you put it all in one paycheck versus spreading it out. So I think I've seen owners pay more withholding taxes because of that. And then at the end of the year, you end up with this giant federal tax bill. And then on January 15th, you have to do your estimated taxes and your PTEs. It's just like, it's a bad time of year to have extra big giant tax liabilities, in my opinion. So if you are going to go the route of putting S-Corp on just one paycheck at the end of the year, make sure there's like 5 different reminders about it. And business owners, you got to actually see your paycheck and prove it was done before December 31st. I need you to do that. I need you to specifically ask for the paycheck, the pay stub that shows the S-Corp medical included. And then does it look accurate based on your knowledge? So S-Corp medical is an important item that often is not done correctly, and that leads to messes. And if this happens over and over again, the CPA is going to get a little grumpy and get kind of sick of it, right? So what I want all of you to do is in October, early November, I want you to make a note that you're going to do an S-Corp medical audit. And you are going to have your little Excel spreadsheet listing the premiums by month, cash basis that were paid out, not the bills, but cash basis. And you're going to have a total, and then you're going to have a total for what's been included in payroll so far, and you're going to do the math, right? So you have the total premiums for the year, what's been included in payroll so far, subtract that from the total. Now you've got the remaining that needs to be included in payroll. How many payrolls remain in the year? Divide the balance remaining by that number, and that's what should be in the last few paychecks of the year. Now, QuickBooks Desktop Payroll is amazing in so many ways, probably the best payroll software out there, but it allows you to put in a maximum. So if your payroll software allows you to put in a maximum, a limit for the year, put in that total you calculated, the 12 months of premiums, put it as a limit, and that way, even if there's penny rounding issues, the software handles it and makes sure that the total that you need it to be will actually be the total it is. And as I said, this premium has to be the policy under the owner's name, the entire policy. So if it's a family policy, that entire family premium is considered S-Corp medical. A final note on all things S-Corp and being a business owner. You know, there's other things that S-Corp owners need to take into account, and that, for example, is if they have a company vehicle. If they have a company vehicle, they should be reporting to the CPA percentage of personal use and personal use of company vehicles. This is true for all employees and the owner. I said all employees and the owner. Okay? Personal use of company vehicles is a taxable fringe benefit and should be included in payroll. For the employees, if taking the company van home at night is at the convenience of the employer, meaning they want the person to go straight to the job site in the morning, then it's not a fringe benefit. But if the employees are driving the cars back and forth to work purely for their own convenience, then it is a taxable fringe benefit. And at minimum, the commuting from home to work, that home to work commuting miles, that's a taxable fringe benefit because commuting cannot be deducted as a business expense. And if you read the IRS literature, which I'm sure you all do in your spare time, I do, so fun, you will find out that it is a taxable event. So there's lots to this world of bookkeeping, and especially when you add in payroll, there's just a lot to it. IRS has some great information though. They have these amazing tables that show you taxes, and it shows you what's taxable for an employee versus what's taxable if you're an S-Corp shareholder, because it's different. So there's a lot of resources out there. But your bookkeeper needs to be given the time to do research, and they need to be told not to do it all with Gemini or ChatGPT. Really instill, and dear bookkeepers, I instill in you, please look at actual government websites, because the AI isn't that smart.